The US dollar, for decades, it's been the heavyweight champion of the financial world. But right now, it's looking a little shaky. Why is the dollar all of a sudden losing strength? And more importantly, why should you care, especially if you're not even in America? Well, have you noticed prices creeping up, vacations getting pricier, or even your local economy getting more expensive? Well, guess what? The green paper in Uncle Sam's wallet is one of the many reasons. Today, we're pulling back the curtain on the weakening US dollar and how it's quietly messing with our lives outside of the US more than you think. What's really happening is the US dollar is getting weaker against other major currencies at the moment. It happens time to time. Markets don't just go straight up or straight down. They act more like roller coasters. But all markets have been on a dip since the commander in chief has come back into the White House. Now the stock market and crypto markets are in a bit of a slide along with the dollar, which isn't normal. After years of dominance, the dollar slipped from its highs during the pandemic. Why? It's super simple. Inflation's been working overtime. And because of that, the Federal Reserve changed its mind on raising interest rates aggressively. And everyone around the world is a bit more cautious about investing into the US. Some of it is caused by these talks of tariffs, which I think might be an attack on the markets so the rich can get richer. But let's not get into that right now. None of these conspiracy theories or things I think. Just a year or two ago, the Fed was rising interest rates like they were cranking up the volume at a rock concert. What they were doing was trying to control inflation. Higher interest rates equals a stronger dollar. But now, the rate hikes are reversing, but still inflation is lingering and it's making investors nervous. And it's making them question whether the US can keep flexing its muscles. Plus, throw in political gridlock, tariffs, attacks on US allies, US debt levels soaring past 34 trillion, and uncertainty over future policies. Because I don't think anyone knows what's going to happen at this point. And suddenly, that safe haven currency starts to wobble a little, and markets don't do well with wobble. Here's the thing. The markets usually have already priced in the future. And what it's saying is that the future is unknown at this point. When interest rates are lowered, that means money is cheaper to borrow and more money is printed, which is what the Fed is trying to do. They're trying to lower interest rates. They don't want to do it quickly, even though there's pressure from the president to do so. But their ultimate goal is to lower them. Now, lowering interest rates makes everything go up in price eventually. The more money printed and borrowed, the more money which is in the market, which means more money competing for things like assets or essentials, which means more inflation. And inflation doesn't make just stuff more expensive for Americans. It drags down the dollar's value everywhere. Think of the US dollar like the world's default currency, because that's what it is. It's the currency of choice for international trade, oil, commodities, you name it. But when inflation spikes in the US, the purchasing power of the dollar drops. It takes more dollars to buy the same amount of goods. And for global markets, this creates a ripple effect. Foreign investors start questioning the dollar's stability. Demand slips and the exchange rate shifts, sometimes in your favor and sometimes not so much. To explain it more simply, inflation inside the US doesn't stay inside the US. It leaks out, hits global markets, and starts tilting the balance for people everywhere. So my point is that you're not safe from it anywhere you are. You can run and hide, but Uncle Sam's decisions will hunt you down and find you. Now, if you're living outside the US, here's the thing where it gets spicy. Because, like I said, a weaker dollar affects you even if you're spending pesos, euros, or rupees. It doesn't matter. If your local currency is pegged to or influenced by the dollar, looking at you, parts of the Middle East, Caribbean, Southeast Asia, your money might suddenly buy more or less depending on the strength of the dollar. Some currencies strengthen as the dollar weakens, making US imports cheaper. But for others, especially dollar-reliant economies, it gets dicey. It could actually make things more expensive. It affects your cost of goods, Since so many commodities like oil, food, and tech components are priced in US dollars, a weaker dollar can sometimes reduce import costs. That's good, right? Cheaper goods are always greater, no? Yeah, that's true, unless you're in a country that relies heavily on exports to the US. Then suddenly demand might slow because Americans can't afford as much. And boom, there's a huge impact on local businesses. It affects expats and travelers. Are you living abroad with US dollars in the bank account? Bad news. Your spending power just shrunk. Suddenly, your rent, groceries, and travel are costing more when converted to local currency. But if you're earning in, say, euros or yen during these times of weaker dollar, you might actually be getting more bang for your buck when traveling to the States. So it's wild that it affects everyone so differently. I remember years ago when the US dollar was actually worth less than the Canadian dollar. Yeah, that's wild, right? You almost never see that. Back then, we head down to the States from Toronto. Since the border's basically a short drive away, load up on US cash like it was monopoly money. Not really, because Canadian dollars look more like monopoly money. Everything felt way cheaper over there because prices were in US dollars and our dollar stretched way further. It was basically a shopping spree every time we went down. Now, of course, if we came back with too much and we got caught, we would have to pay duties at the border, but it would still be cheaper for us to shop down there than buying those same things in Canada. I think that might be the last time I'll ever see something like that. At that point, the Canadian dollar wasn't so tied to the US dollar like it seems to be today. It definitely made cross border shopping a steal. But honestly, I can't even remember if it made US imports any cheaper. Me being so young, it was about how much further my money would go once you went over the border, not what the cost impact would be back home. In Mexico, tourist hubs like Cancun have actually seen shifts in visitor spending. Americans used to have huge purchasing power with dollars in Cancun. Huge. In early 2025, the Cancun airport recorded 3.76 million passengers. That's down from 4.13 million in the same period of 2024, nearly 9%. And let's not ignore how expensive things have gotten there. It's one of the most expensive places in Mexico, and it's because of the impact that the US dollar has had on the economy. In Japan, the yen had a big dip a few months ago because Japan decided to raise their interest rates from being zero or close to zero since the 1990s. But now it seems like the yen is having a bit of a rebound because the US dollar is weakening. Japanese exports, cars, electronics, they might face tougher competition abroad because now they're more pricier compared to the US made stuff. In Brazil, a weaker dollar gives Brazilians more breathing room, making imports cheaper. But Brazil's exports, soybeans, coffee, could see a reduced profit margins since they're paid in US dollars. Now I know what some of you might say. Not true because Brazil is now a BRICS nation. That might be true, but it doesn't matter because the US is still the biggest trading partner with Brazil. And Brazil is 100% affected by the US dollar, and this BRICS nation thing won't have an impact for a very long time. Countries are still addicted to the US dollar. And if you ask me, this BRICS thing won't go anywhere. But what do I know? Here's what I mean about them being addicted to the US dollar. Emerging markets, especially, these countries with heavy US debt exposure, often borrow in dollars. When the dollar weakens, repaying that debt gets easier, which sounds like a win. But hold on, if investors' confidence drops in the US, global investment might flow somewhere else, creating volatility in capital markets. For example, like Turkey, South Africa, or Argentina might find it easier to service loans. But if trade slows, inflation persists, or foreign investment dries up, their economies might still wobble, even if their purchasing power is rising. It's a delicate dance. The dollar weakens, debt repayments are easier, but it can potentially slow down economies, which can cause a ripple effect everywhere. So this is how the world is reacting. Governments in some countries are adjusting policies, raising or lowering rates to stabilize their own currencies, which is not always good. Others diversify in foreign reserves, moving away from dollar-heavy portfolios and putting them in euros, gold, or even cryptocurrencies like Bitcoin. And individuals like expats are opening up multi-currency accounts to hedge against US fluctuations. Most say they're doing it just to be safe. And businesses abroad are trying to minimize the dollar dependency in any way they can. But there's a universal playbook. Every country, every person reacts differently, depending on how entangled things are with the US and the US economy. But a weaker dollar isn't always bad. It's a big win for exporters outside of the US. Plus, global inflation can ease when the dollar weakens, since raw materials priced in US dollars become cheaper. But we don't usually see prices decrease as easily as they do increase. The big question that everyone is asking is, will the dollar bounce back anytime soon? Well, there seems to be a split in the answer right now. Ask any two analysts, and most likely you'll get two different answers. If the Fed tightens rates again, the dollar could regain strength. But that puts a risk in slowing the US economy. If inflation stays sticky and debt grows, the dollar's slow decline might continue, leading to a long-term shift in global financial dominance. It seems like no matter where you look on social media these days, you find people calling out America's decline. But is this the time? So soon? Probably not. But I don't have a crystal ball, so only time will tell. So what's my point in all of this? The US dollar's strength or weakness isn't just an American story. It quietly rewrites the financial script for people everywhere, from street vendors in Mexico to expats in Thailand. America has its tentacles stretching far and wide. And if you think that anything going on in the US won't reach where you are, think again. You tell me the truth. Have you noticed changes in your local economy lately? It's most likely because of the US dollar decline. Maybe your rent went up, or that overseas vacation got pricier. Things are changing worldwide, and it seems like the only way to stay safe from these things these days is to hedge against inflation. Buy more assets, if you can afford to. One way to keep your purchasing power is to move somewhere cheaper. So check out this video. I talk about cheap places to live where your dollar can be stretched further. Click it, and I'll see you there.